This is Catherine Tindall and the Financial Advisors Want to Know episode about what's going on with the Employee Retention Credit. My name's Catherine Tindall. I'm a CPA with Dominion Enterprise Services. We're a CPA firm that works specifically with financial advisors as their trusted tax professional for their own firm's tax and accounting needs. So today's episode around what's going on with the Employee Retention Credit is something close to heart for me. I've dealt in this program extensively over the past couple of years, and I always am fielding lots of questions from advisors and from other tax professionals and employers around this program and what's going on with it. So today's episode is designed for you to have tools to have conversations with your clients who either own businesses with employees or organizations like nonprofits that have employees who may have taken advantage of this program, and what you need to know as an advisor to be educated in having the right conversations and maybe things that you should approach with your clients related to it. So first of all, I want to discuss how this program came about and just some basics of it if you're not familiar with it. During the pandemic, there were a number of aid programs that came out. Unlike with the PPP program that was administered by the SBA, the Employee Retention Credit was administered by the IRS. And so it's a tax credit program. It behaves within the tax code. And that's why there's been a lot of problems with it. It's hard for the IRS to be nimble. It's also hard for them to administrate new programs. And one like this, where it was designed to try to go out to the public quickly, but there was a gap between the way that Congress wrote the laws and the IRS's interpretation of those. And so it's made the program very complex and hard for employers to navigate successfully. So you as a financial advisor, if you have business owner clients who participated in this program or who have claims that are pending processing, or maybe they never did this program but are interested in it, this episode's designed to help you have the right conversations and know what you need to know about it in order to be successful in those interactions. So for business owners who did do the claim process already, a big concern is around the bad actors that were in the space, and a lot of people filed for credits that they weren't actually eligible for. It's a really hard topic to cover because a lot of these businesses, this is significant money that was paid out to them, and for them to find out that they're not eligible and that they need to repay funds is a really painful thing. But I went back and calculated on a claim that was a $100,000 credit, which is not that wildly large for these because the credits themselves are up to $26,000 per employee. So even with small companies, this can be a problem. A company that got $100,000, by the time you calculate if they had to pay that money back, pay a CPA firm to represent them in an audit, they have to pay income tax on it, and they could potentially lose the benefit of re-amending those returns and getting their income tax back, penalties, interest, etc., all the headaches. They could be out over an additional $150,000 beyond just the credit that they got paid themselves. And so for a business, that could be life-threatening, right? And so for you as the financial advisor, it's worth at least having the conversation for people who did already apply for this, where they applied, how they did it. And some big red flags are, you can just ask the question, did it feel like a salesy process, or were you talking to a tax professional most of the time? That question alone, I think, weeds out most of the bad claims. Because if that person wasn't dealing with a tax professional who was cautious, who was taking their time, and they were dealing with somebody who was a salesperson, this is a tax credit. This isn't a product to be sold. And so I'd be highly skeptical of a claim done where the client was only interacting with a salesperson and not interacting with a tax professional during the process. So for businesses where they have applied and are waiting for the funds, there was a large moratorium that was announced back in September of 23. In reality, the processing moratorium started earlier than that, but the IRS just didn't make an official announcement. And so there's a backlog of a lot of businesses who applied for this program who are still waiting to find out what's going on. The IRS announced last week that they are going to begin to process returns that were received prior to the moratorium date in September, but they're going to do it at a much slower pace. And that the analysis that they did on the claim inventory they have over 1.5 million returns that are just sitting, waiting to be processed, that the vast majority of those were considered an unacceptable level of risk, and that they're going to be doing some kind of inspection measures to make sure that the claims are legitimate before they get filed, before they get paid out. And so for you as an advisor, if you have a business owner client who is waiting for their funds to be paid out, same question applies, who did the original applications? And if you have concerns around the professional due diligence involved there, this is something our firm is helping businesses get to the bottom of. And the benefit of having these conversations now is that if they go back and find through a little more due diligence that they weren't eligible for this program, instead of going through a messy and nasty audit just to get to the answer of no, you don't qualify for this, and having to pay professionals to do that, it's better to do the assessment and they can just withdraw their claim with the IRS, and then they don't have anything to worry about. There's a withdrawal program that the IRS offers that's very simple to operate once you know that that's the right step. But for a lot of these businesses, they might not be aware that that's an option. They might not be aware that there's problems with the claims that were filed. And so now is a good time to have that conversation, maybe talk to the professional that helped them with this, because even for small businesses, this can easily become a six-figure problem and tax credit. And sometimes there's not a competent financial person in their lives that's looking at this, especially if they self-prepare their own returns, or maybe the tax professional they use isn't that experienced. You might be more inclined to be able to smell that there's something wrong than the tax professional involved. And so it's a good conversation to have. And it doesn't have to be a conversation with them where you're immediately skeptical, but it's something to be curious about. And another way that you can frame this as well is that the 2021 program is still open. The statute of limitations hasn't expired yet. And although there's some pending legislation that may end it early, you can frame that conversation around, you want to make sure that you took full advantage of this if it's available for you, because the 21 program, it's up to $21,000 per employee. And so there's still a really big opportunity there. Most likely they probably took advantage of as much as they could have, but you don't know. I see people that come in for us who were unaware of some of the rules, the eligibility rules, and they actually end up qualifying for more than what the original tax professional filed for them, just because of some nuanced rules that maybe they weren't aware of. And so it's good to have a second set of eyes on it, because for a lot of these business owners, this is going to be the largest tax credit that they ever participate in their business lives. It's going to be one of the bigger windfalls that they ever get from the government, unless we have another pandemic. Touch wood. And so for you as the financial advisor, it's an opportunity for you to provide them a second set of eyes on the situation and be able to get them in touch with professionals that will help them through this process. So our firm works with businesses to determine whether or not they've filed correctly, whether or not they have the right supporting documentation, whether or not they actually qualify for this, and what the risk profile is that they have with the IRS, because it is a tricky program to qualify for sometimes, and there's been a lot of abuse in it. And so getting to the bottom of that now is going to be a lot better for those clients than waiting for a nasty IRS audit or inspection, when you as the financial advisor could have asked some questions and dug into it a little bit deeper to help them understand that, oh, you actually might be sitting on a problem here, because they don't receive updates from the IRS. Most of your business owners are really busy running their businesses. They're not paying attention to IRS news bulletins or financial markets or anything like that. That's what they hire their other professionals for in their life. And so this program in particular, because it's so high risk, I definitely recommend having those conversations. So for claims that have not yet been processed, the IRS is required to do something about it. Unlike with other programs where the government can just kind of pull funding as it chooses, because this program is still open, even though it's in a processing moratorium, the IRS is required to eventually process these, and they've been getting a lot of pushback from the government on it so far. So it's something that we're hoping to see more progress in. We're also expecting to see a lot more audits pick up over the course of the summer for pre-processed claims. And then we're also expecting to see more enforcement actions on some of these bad actors that were allowed to go unchecked in the market for so long. It took several years for the IRS to implement the moratorium, and they're always behind the eight ball. So a lot of the bad actors were allowed to proliferate for a long time before they've gotten involved. And I've seen in practice, there was just a lot of really nefarious things going on. But it is a completely legitimate program. It's a tax credit. How easy is a tax return to do? Not that easy. The IRS got involved with this program and made it a complex tax credit. And so you just need to make sure that you have the right expertise guiding you in the process and guiding the clients in the process. So this is something our firm is doing. If you have any questions or looking for more resources, we have a lot of different guides and due diligence checklists, deeper educations, et cetera. But it's worth having that conversation with your clients and figuring out what's going on with it. It's also an opportunity to reach out and talk to them if you haven't communicated with them in a while. Hey, I saw this thing about the ERC. Didn't you guys do this? It's a way to show that you're caring and you're paying attention to them and kind of keeping an eye on things that could potentially be problems for them. Because this program, like I said, can potentially become a six-figure headache for a small business, and that's really meaningful. So I hope you enjoyed this episode of Financial Advisors Want to Know about what's going on with the employee retention credit. Feel welcome to subscribe below. We're going to have a newsletter where these get sent out as we do them regularly on different topics for advisors, and always interested in your thoughts and feedback. Whatever platform you're listening on, would love to hear what you think, questions that you have, and ideas for episodes, and anything you'd like to share with us here at Dominion.